So the AI stocks have been getting all the attention. We've seen it. It's in all the headlines and everything like that. So it's crowded, people. I start to bargain hunt for other companies when things get too crowded in certain spaces. You look at the SOXX, the semiconductors sector, it's hit that all-time high and it's backed off and it's retesting the upward trend. So it's at the top. I'm not interested. So first, I went and I did some research and studying with my AI agent as well, but I shared my Home Depot trade. Made 14.5% on one trade. It was great. So the next thing, on Friday, another, let's say, company away from the AI bubble had a good FPE ratio down last like 17. That's a value. That valuation on this. It's a pharmaceutical company. It's somewhat recession proof. Look, I'm not telling you to sit here and buy it's ABBV is Victor is the ticker. This is me walking you through my personal process. This is not financial advice, okay? When it comes to valuation, trend lines, I look at the earnings, the risk management overall, those high valuation companies, okay? It might not be the best area to do the cover calls in. My slow and steady approach to this thing has been working, okay? But now I transition over into looking at leaps options. Now, it also pays a dividend. You know, I was holding a couple stocks that were paying dividends and I didn't even know it. Dividends are nice because every quarter when those things hit, you're like, oh, that increases your percentage gain quite a bit. It's fun stuff. So it's kind of stock that can attract income investors, these value type investment mindsets, and also people who want exposure outside of the high tech beta. It's interesting when we look for things that aren't as popular. And Warren Buffett talks about this. He doesn't care what cycle we are in the markets. He just looks for value companies that are valued properly. And this is one of them. So let's look at the chart. This is what I was talking about. This is backed out long term. I just want to show you real quick. And this is on the daily charts. Back here in after COVID 2020, I drew a trend line from the lows of 2020. If you follow it up, coming up around 23, this low pivot, another pivot right here. So this is a pretty strong trend line that came up to current within the last week or so. Right here, there was another pivot on the low. And that's kind of what I wanted to focus in on. And as I zoom in a little closer, these are the daily candles. You can see this is that last pivot low on this long-term upward trend line. And the other thing I'm looking at, if you can see the orange, that's a 52-week high and the 52-week low. We're somewhere in the middle. I like to see it lower towards the 52-week low, but it's okay with this strong earnings and this company doing well that's outside of the AI discussion like I was talking about. And so look at this huge green candle. It broke this support level that I had drawn. This would have been an interesting time to take a look at getting in because it had a strong bounce off that long-term trend line. And here's what happened. This is the earnings hit. There is a surprise of a 2.23 turnaround above expected earnings. I think that's what gave this huge candle on this day right here. So, but, okay, technically speaking, I couldn't find an entry because we didn't cross trend lines. I always look at crossing trend lines and some resistance levels for a buy signal, okay, indicators to get in. So I continue to watch this thing. I wanted to see what it did with this new trend line that I drew. You got to have a couple touch points to make it a real trend. Okay, this is the big pivot here. So then we did see another one, 2, 3. That's where the downward trend reversal conversation comes in. This downward trend line, I ended up drawing another one that had 2 touch points, and it had a third on Thursday. And I started looking at this going, okay, it's following the steeper upward trend on good earnings. So there's some strength coming in. Look down here at the bottom. The RSI is above 50. Okay, we're getting up around 60. There's some momentum on this turnaround. My indicator to get in was right here. Okay, now here's the 4-hour chart. I have a couple rules. Any trade that I make, I cannot put in more than 10% of my portfolio. Okay, that's kind of a high number. I like to be below 10. I like to be around 5, 6, 7%. But the maximum is 10% that I pull off of this particular portfolio that I'm putting this trade in per trade. Now, there's a lot to be said about that, but this is where you get that discipline, and it's risk management. No more than 10% of my capital is going into any one trade. Now, to come in and buy 100 shares, because I like to maintain 100 shares of anything, so if I need to sell a call option, I have that option. We're trading it around $215 times 100. You got to come in with 21,000, okay, to get 100 shares of this particular stock. So that's a little bit high. That's above my 10%. So I started pricing leap options. So this is my indicator. On the 4-hour candles, I saw that we did break. Okay, this was on Friday. We did break above that downward trend line. So this is kind of a reversal indication that we're changing. And you can see as it's steeper upward, it looks like we made a reversal from the bottom that's underneath here. So we crossed, we maintained it. So the last candle that closed right here, it was still above my trend line. So the fact that this one closed above it was my indication that it's time to get in. I put in a sell order, not at the current, it's a buy order, a limit buy order, a little bit lower, to where I wanted to get in on a good price when this thing backed off, and sure enough, it did. It backed off, and so I got in right about here. The premium for that leap option was right around $41, and it got filled. Okay, now, here's my indicator. I'm going to, on this 4-hour candles on Monday morning, if this thing drops below this upward trend line, that's my indication to sell. Okay, now what should be happening is this thing should be bumping off this upward trend line, and then I do have a resistance level. I will look at what my percentage profits look like at that time. This might be a spot to get out. This yellow line is a resistance level that I drew from going back in the back time frame. 2 main points, ladies and gentlemen. If you're interested in getting into purchasing options, it's more riskier. It's riskier than owning the stock. Now, if you buy a call option out of the money, meaning this thing's trading around 215, if you buy a call option at 220 or 225, you're buying a lottery ticket. It's risky because you don't have any intrinsic value. Okay, when you make decisions to purchase specifically leap options, it has to be in the money so you have intrinsic value. I'm not just buying this because it went down. Okay, what I'm saying here is it's cheaper than the AI sector. Okay, don't get trapped with all those high valued things and the hype, right? Chasing those green candles, the FOMO is a real thing. Look, if you want to follow the charts, the trends line that I'm showing here, the setups like this, and I'm constantly looking at this stuff. I'll be leaving this TradingView link below here. This is the charting service I use. Is the best one out there. I've tried tons of them. You can sit there, click this link on this charting for TradingView, and it's basically you can sign up for free. If you want to add other indicators as you get more familiar with the interface, you can do that as well. All that information is there. So anyway, Hop Sauce signing off. Appreciate your time, everybody. Hope you got something out of this. Let's see how it plays out next week. All right. Peace out. Peace out.